Hey everybody, welcome to the weekly technicals for Aussie dollar, dollar CAD, Kiwi dollar, the COM dollar complex for October 3rd, October 7th, 2016. Another very important week coming up here on all sorts of levels. There is internal stories to each of the COM dollars, also the story, of course, against the dollar itself. So let's just sort of start with the broader story that I think that could have a big impact, and then the individual stories on each one of them that we're definitely going to be following very carefully. The broader story here is, of course, the carry trade on-off. The carry trade on-off is really signaled by whether we have strong U.S. data or not. My contention for a couple of weeks going backwards has been that if we get much stronger indication that U.S. rates are going up, it's going to start to impact the carry trade, because it's not so much the fact that both Aussie and Kiwi have a positive yield against the dollar. It's the fact that the differential between the two is going to compress, and that's going to push money out of both of those currencies. There was also, I ran a sort of interesting hypothetical last week. Those of you who may have caught me on CNBC could have seen it, where I argued that a Trump presidency, of course, would be extraordinarily negative for Aussie because of the pressures against China, the pressures of deficit spending, the pressures of higher yields, all those things. That, I think, thesis pretty much has gone into the garbage can at this point, given the fact that over the last 48 hours we've had a complete immolation of the Trump campaign. But again, as I say this, U.S. politics is the minefield of predictions, and you certainly have to have an absolutely open mind as to who could win the election. It's by no means a done deal in any way, shape, or form, but it certainly does relieve, I think, right now, some downside pressure on the Aussie on the political front. But there's lots of other arrows that can be thrown at the COM dollars this week, and that's what makes it, I think, so interesting. So, of course, the first thing is the pro-carry, anti-carry trade. We'll have to see how the U.S. data develops. But the secondary stories could be just as important, which is, what's the RBA going to say? Is the RBA going to remain as sanguine as it has been for quite a while? Are they going to effectively not signal any potential for downside rates? If that's the case, the Aussie actually probably gets a small bid, and we still stay within that 75, 77 level. With the Kiwi, there really isn't much on the plate, and it's I think we have the dairy auction this week. I'm not sure. Positive dairy auction 6 months in a row certainly should help the Kiwi. The Kiwi actually had a big recovery. One of our ideas, which was, let's sell Aussie Kiwi short on a mean reversion idea because Aussie had run away too far, in our opinion, against the Kiwi, did work last week on the crosses. But this week, I think it's much more of a crapshoot as to where either one of the pairs will go. I still think there's still more downside in the Aussie than there is in the Kiwi, but we'll have to see really what the RBA has to say, and also see there's a modicum of Australian data. We have trade data, we have retail data. If we get to a situation where the RBA is relatively sanguine, but then the data following it starts to show massive misses, the market will reassess completely the idea of a possible RBA rate cut before the end of the year, and I think the Aussie will suffer for it. So you have these internal stories going on there, and then of course on the loonie side, we have the Canadian labor data, and we have I think we have. Let me see what other things. I think we may have some retail sales. I'm not sure what Canadian stuff we have here. We have IBPMI retail data. I think that's just about it. Building permits, nothing much. What was impressive actually about Canada is that last Friday's GDP was considerably better than the market expected. It may be a situation now where the oil prices have healed enough to the upside, and demand has generally stabilized across the whole Canadian energy spectrum enough that it's beginning to show a modicum of recovery. We'll have to see. Dollar CAD was quite weak until it sort of hit that big ceiling at the 133 level, and that remains to be a very, very big resist point for dollar CAD, so be watching that very carefully. Let's take a look at the levels, and then we'll just look at the charts to see where everything stands. So it's really very much the same story as last week. This one of the interesting things is that we really haven't changed our levels because the markets have just been flat to key breakout levels. 77.50 to the upside, 75 to the downside on the Aussie. Caddy, definitely 133 is just this very, very strong cement ceiling. With 130 now support, if we have a big breakout, I mean, if oil goes 50, if oil goes even close to 50, that 130 is going to go by the wayside. We could see 127 very quickly. So Caddy is still very, very sensitive, very responsive to oil prices. But I think the OPEC agreement last week was a modest impact on oil prices, and unless barring any fresh demand that we see in crude, it's hard to imagine that we see a huge rise in oil by the end of this year, by the end of this week. But that's certainly going to be a big impact on dollar CAD. And Kiwi just kind of quiet. I think it's really trading as a side story to both Aussie and CAD, but still relatively well bid. If you look at the charts here, so let's take a look first at the Aussie chart. The 75.50 is very decent support here, and the 74.50 is really, really strong support. So the range basically is 77.50, 74.50. We're mid-range. They bought the 76s underneath here. A break above here, a break above 77.50 would be very bullish, because that would really be a massively long-term continuity of the upward trend in the Aussie. That would suggest sort of two things: dollar not going anywhere, RBA very sanguine. Chinese data been okay. We had the PMI data over the weekend. It stayed above 50 boom bust level, although it didn't really improve much. It would really just be all carry, all systems go into the end of the year kind of a story to take us above 77.50. That's I think a hard scenario to sell to people, but given the technicals, it's not that difficult. I mean, technically, it still looks very, very good to the upside. And if you just look at the charts and ignore all of the swirling stories around this trade, if we can take out the 77.50, it becomes a very, very bullish trade. For now, though, it's still the 77.50 to the top, 74.50 to the bottom. That's kind of where we stand. Dollar CAD, a lot cleaner in terms of failure. So remember, I've been just this massive dollar CAD bull, buy the dips, buy the dips, buy the dips. It's been working every time since the beginning of the summer. But now, what's interesting, and I think this is really worthwhile. Let's go back out onto the weeklies for, I don't know, 3 years. Yeah, maybe let's just go long term. Let's just kind of see here. We see that this is a very, very important resist level. I mean, 33 is a big important resist level, and 33-35 corridor is a big resist level. That's where it failed before the vertical move once oil went down to $28 and then came right back down. And now we're sort of consolidating around this level. Now, on a longer term basis, this is just simply nothing but a retrace off of massive correction in dollar CAD, right? So we had this huge uptrend, retrace, and possibly a move back up on a longer term trend. But still, in the trenches, in the day-to-day business where we're trading, this 33 is a very, very serious resist point. And the fact that it got rejected, I think, is near-term bullish Canada, bearish dollar CAD for the time being. So the 130 is going to be the big watch point. If they come in and buy it up at this point, we'll probably have a second wave up to the 133s. But if we get a combination of strong oil prices and a decent Canadian data set, it's very possible that we could test the 130 to the downside. And then the real big support comes in at the 128s. So I think it's very much worth. I think there's a potential here for relative strength on Canadian dollar, worth watching as we go forward. And then last but not least, here's the Kiwi. The Kiwi technically looks very good. We held the 72s, looks nice to the upside. It really needs to take out the 73s on a closing basis. So daily candle closes above 73, really puts us into a nice technical formation for a run back up for a double top test. And Kiwi still looks to me as a relative strength trade. So that's pretty much how it shapes up for the week. It's really going to be dominated front of the week by the Australian news flow and back of the week by the Canadian news flow. So be watching both very carefully. Also watching for the dairy auction on the New Zealand side. And I wish you guys the best of luck, the best of trading. Boris Nossberg, over and out.